So payouts remain okay, but clearly there is not a bit of a drag. There is a serious drag on HCL Tech today post their numbers, 9% lower now. I stand corrected. When it was 6% lower, I thought it will not really end at those levels. It should recover because the commentary, to my mind, seemed okay. But
this is a pulping. This is a beating, Neeraj. And then the question is that why to this extent? Why this extent of pain?
Okay, Sajeet, any thoughts?
There are a couple of thoughts here, and one is look at the order when it's in the average $2.1 billion range is coming in. But if you look at the trailing 12 months, it's nearly down 10%. So it's not showing order book growth which is coming in on a trailing basis. The second one is on the Q4 numbers. Of course, the lower end of the guidance has been raised to 4.5% to 5%.
Yeah.
Right. But that's been taken from a point of view that they've acquired an HPE business, and that's the reason why the lower end has been brought up. It's not the normal core business which is growing, that's why. Q4, if you look at, if the company is going to meet the 4.5% to 5% business, then we are looking at minus 1.6 to flattish growth in revenue, which is there. That's not the kind of guidance which is coming from other tech companies in that sense. And HCL Tech has enough more than other companies like a TCS or other companies. So there is a correction which is in waiting for them. Because if you look at the entire tech rally, TCS has been the laggard in that. Infosys, HCL were the companies which were much ahead, and that correction is happening.
Relativity when it comes to other companies
and performance, and also because while you say that okay, the lower end of the guidance has been upped, so it looks better, but it's because of inorganic growth which is coming into play.
I actually want to pull up that one line because a bit of a contradiction there, and correct me if I'm wrong. You're saying lower guidance of the is up because of one client, but one major client is also disengaging.
Yes.
So, but you can't. You're looking at it both ways. Fine, one client has come in, that's why the lower guidance has come up, and also it's inorganic, right, because of acquisition.
Yes, so HPA business is expected to bring in 50 bips of additional revenue in Q4, but there's a big large client of HCL Tech which is disengaging, which is in the consumer goods retail space, which is happening. And so, incrementally the core business which is there, or the organic business as we call it, that's not growing. It's an inorganic one which is coming in. So the impact of that core client is much more, it seems, in Q4, and that's what the street is pricing in. Had it increased the guidance or the upper band of it, then it would have been a different thing, but it hasn't. So the street is now calculating what kind of growth HCL is going to do in Q4, and which is coming from 1.5% negative contraction to almost flattish growth, which is coming in there. So it's basically adjusting to that entire thing. So commentary is good. I saw what Vijay Kumar had to say. The commentary is good. He's talking about smaller deals coming in, but smaller deals coming in also brings in challenge of TCV going forward, because you need to have so many deals to get that average order book.
But I think their call, Sajeet, seems to be, and I wonder if TCS has said the same thing, that a lot of deals are right now shorter tenor in nature, because they are Gen AI related deals as well, which are naturally shorter tenor in nature, but they actually support the near-term growth, which is because gazing out 12 months out is virtually impossible in the current status for any company right now.
And then the reverse. If there is dependence on just few larger deals, that's also a negative. I don't know. I feel that this is, sometimes we end up doing a bit of a post-facto analysis. Everything you're saying, Sajeet, absolutely valid. Does it warrant the kind of hit, 9%, 9.5%, nearly 10% down?
We should look at what the stock has done in the last 6 months.
Let's look at that chart.
And then we can compare it with Infosys or TCS, and then see the relative performance of those companies. And the kind, of course, the expectations are high from Infosys, which is coming, I think, on Friday, if I'm not wrong. But
16% up in the last 6 months.
And compared to Infosys or a TCS.
Yeah, Infy is about 13.5.
Yeah. So not.
TCS would have lagged for sure.
Yes.
TCS is just 2%.
Yes. So so that catch up is happening right now. putting everyone together is something which is there. So one clear theme which is coming out from two big IT companies in this quarter is that, okay, smaller deals are coming in, discretionary is coming up. BFSI, US is working, Europe is still laggard. And if you look at the deal pipeline, it is taking much more effort to create that deal pipeline.
What about the currency point?
Currency is a very interesting fact. When I was speaking to TCS, they said, okay, rupee depreciated, and so we should have enjoyed that depreciation.
Yeah.
But more than half of our revenues are coming from pound or euro based, and against that, rupee has been relatively stronger.
But so they also have a very large Indian client, as far as TCS is concerned.
No, that's tapered out.
Okay.
So in Q3 it tapered out, and Q4 it will completely go off unless they get the 5G order from BSNL. Otherwise, it's not. So they are talking about the growth despite a BSNL tapering off. Here, there is a tapering off of one of the big clients which is happening, but they're not able to compensate it against the growth.
Could be several